What is liquidity? Liquidity is the ease with which an asset or security can be converted into cash without affecting its market price. From this definition, we conclude that while trading an asset, there would be certain liquidity levels at which that particular asset will be converted into cash with ease. So, the market will tend to move in that direction to execute the buy and sell orders. The problem here is that everyone already knows this definition, but only a few among the millions know how to trade using the liquidity. So today, we will dig deep into the ICT concept of how to trade using the liquidity. This is going to be a detailed but the simplest and most effective lecture that you have ever seen about the liquidity concept. And one thing that I am pretty much sure of is that your weekly and monthly P&L will turn from red to green if you stay active during the whole lecture. So without wasting any more time, we will jump into our lecture. Okay, so this is what we're gonna do in this strategy, okay? The first step will be changing the timing, okay? I will show you how to change it. Then the next step will be drawing some vertical lines, and the purpose is to separate each trading day. So I will show you where to draw these lines. And then after drawing these lines, we will look for the sweep of the previous day's highs and lows, okay? So we will draw some horizontal lines, okay? And then after drawing those horizontal lines, we will compare the sweeps of the correlated pairs. What is correlated pairs? Like in trading, if you are trading Forex, you might have noticed that if euro goes up, GBP also goes up. And in crypto, if Ethereum goes up or Bitcoin goes up, Ethereum also goes up, okay? Similarly, in indices, if Nasdaq goes up, ES also goes up. So these are some correlated pairs. And after drawing these horizontal and vertical lines, what we will do is we will compare the sweeps, okay? And that's where we find the real liquidity, okay? If you don't compare the sweeps, you cannot find the real liquidity sweep. And then we will find some divergences after we compare those related pairs. And after finding those divergences and order blocks, we can enter the trade. So I will now explain one by one how to do it. The first thing is you can double click on these candles and you can change the timing to New York, okay? This was the first step. Then the next step would be drawing these vertical lines, okay, at 12 a.m. Okay, so we have separated each trading day and we will use 15 minutes, okay? You can then shift to smaller time frames like 5 minutes and 3 minutes to look for an order block. And if you don't know what order block is, you can watch my previous videos. I will give the link in the description, okay? Now it's the time for the third step, which is the sweeps of the previous day highs and lows, okay? So this was the previous day high, we didn't get a sweep, and this was the previous day low, we didn't get a sweep of these lows or highs in euro, okay? Similarly, we didn't get the sweep of these lows, but we got the sweep of the highs, okay? So I will draw these lines one by one. Okay, so I have drawn these lines, okay? Here you can see it didn't sweep the high of the previous day. Here it didn't sweep the low of the previous day, okay? Then the next day, this high was swept by this high, okay? And here you can see this high was swept by this high. So you have to draw these horizontal lines to mark the sweep of the previous day high and lows. So once you do it, the next step will be comparing it to the correlated pair. And in this case, the correlated pair is GBP. So let me show you. I will full screen it. So here you can see that euro didn't sweep this high, okay? You can see that euro didn't sweep this high, but if you look at this GBP swept this high. So as I said earlier, once you get a sweep on one of the pairs, okay, that's the real liquidity sweep. Okay, like euro didn't sweep this level and GBP swept this level. So it means that GBP went up just to take some liquidity, okay. It hit some stop losses, okay. The buy side liquidity was taken and it then came down. So that's the confirmation, okay. You have to find order block at this area, and once you see an order block, that's where you have to enter into your shorts, and you can set your targets at these swing lows, or you can go with 10 or 15 pips, okay. Now if you look at this here, the previous day lows didn't get sweep, okay, and in case of GBP, the lows got swept. So here too, the sell side liquidity was taken, and you can see this is an order block. So we got a bullish order block, and that's our entry. You have to put your stop loss below the swing low, and you have to enter at 0.5 fib level of this order block candle. So you can go with 10 pips or these swing highs. I go with 10 pips, okay. ICT recommends 15 pips, but I'm too careful, so I go with 10 pips. Now I will show you one more example. Okay, here you can see that euro swept the previous day high, okay, but GBP didn't sweep this high. So there you have to find an order block. This is 15 minute, but if you go on smaller time frames like 5 minute or 3 minute, you will find an order block. And if you find an order block, a bearish order block on any one of them, or euro or GBP, you have to enter into your shorts, and you have to put stop losses below them, above these swing highs, okay. And as always, 10 to 15 pips. Okay, so here this case is interesting, okay. Like you can see, both euro and GBP both swept the previous day high, okay. So there is no trade. If both sweeps this high, this is not the real liquidity sweep, so you don't have to enter. But then you can see that this was the high which took the previous day high, okay. So on GBP, this high was swept, and on euro, the high wasn't swept. So this is also a good liquidity sweep, a trusted one, so you can enter into your shorts, okay. Like you can see here, it gave a good profit. Like it swept the high which swept the previous day high, okay. So this is also of importance if you get an order block like this after the sweep. So these were some examples of the liquidity sweep. You have to compare the correlated pairs to make sure the liquidity trading work for you, okay. You have to compare this. If you don't compare them, you cannot trade using the liquidity. The real liquidity resides where one of the pair sweeps the high or the low and the other pair don't. I hope it's clear. If you have any questions, you can ask me. Thank you.